Blue Chip Bulletin. Financial market updates and insights.
Today, we're breaking down the latest earnings report from the Chinese tech giant, Baidu. And wow, was it a classic beat and miss quarter? You see, profits looked great, they beat expectations, but revenue? It actually fell. So if you're a skeptical investor, this whole thing is a real puzzle. Is Baidu a fading giant, or is it an AI powerhouse just getting started? Let's cut through the noise and figure it out. Okay, so here's our game plan. We'll kick things off with those confusing headline numbers. Then we're going to unpack the two completely different stories that are happening inside Baidu right now. We'll look at some real, tangible proof of their big AI pivot with their autonomous driving unit, Apollo Go. Then we'll get real and talk about the major risks, including what's going on in the broader Chinese economy. After that, we'll check out their financial foundation. And finally, we'll see what Wall Street thinks about this whole complex transformation.
So, first up, those headline results. Yeah, if you just glanced at the news, you were probably left scratching your head. Was this a good quarter or was it a bad one? Well, the answer, as it turns out, is kind of both. This slide right here lays out the central puzzle perfectly. On the one hand, Baidu delivered a really solid beat on adjusted earnings. You know, the profit number that always grabs the headlines. But on the other hand, the company's total revenue actually shrank compared to last year. And that brings up the big question for any investor. How in the world does a company make more profit on less revenue? All right, let's start with the good news, the profit beat. Their adjusted earnings per share, that's a number that strips out one-time stuff to show you the core profitability. It came in at 10.62 Chinese yuan. Wall Street was only expecting 9.65, so this was a pretty big outperformance. And it was mostly driven by some aggressive cost-cutting and better margins in their newer AI businesses. But here's the other side of that coin. Total revenue for the quarter was down 4% from last year, and that top-line decline is what spooks investors. It really brings us to the main question we're trying to answer today. What is causing this disconnect between profit and revenue? So how do we explain this? Well, the answer isn't a simple recovery. It's what we can call a K-shaped recovery. You know, where the two arms of the K are pointing in opposite directions, that's what's happening inside Baidu. Different parts of the company are heading in completely different directions. And this chart, wow, it just lays it all out, doesn't it? It's like you're looking at two completely different companies. The old legacy online marketing business, the search ads that basically built the company, is shrinking, and pretty fast. But at the exact same time, their non-online segment, which is almost all of their AI and cloud stuff, is growing at a really healthy clip. This isn't a slow, gentle transition. It is a dramatic and rapid pivot away from their old business model. And get this, inside that growing AI segment, the real engine is their AI cloud infrastructure. Revenue here shot up an incredible 143% year over year this quarter. Now, to be fair, it's coming from a smaller base, but that growth rate is way ahead of rivals like Alibaba and Tencent Cloud. This is the new growth story, and honestly, it's what's keeping the whole company's numbers from looking a lot worse. And this isn't some happy accident. As the CEO Robin Li put it, this is a deliberate, company-wide strategy. They are betting the entire future of Baidu on becoming an AI-first company. And the numbers we're seeing show that this pivot isn't something that's going to happen. It's happening right now, in real time. Now, AI cloud can feel a little abstract, right? So to make this whole AI story a little less, cloudy, let's look at something you can actually see. The most visible and futuristic part of Baidu's strategy, the Apollo Go autonomous driving unit. I mean, the scale here is just expanding like crazy. Apollo Go's Robotaxi services are now operating in 26 cities around the world. This is way beyond some small pilot project. This is a rapidly growing commercial service. And people are actually using it. This isn't just a tech demo. People are hopping in these cars. The service has already given over 20 million rides to the public. That shows real-world adoption, and it proves they're solving the massive operational challenges of running a huge fleet of self-driving cars. And you know what's behind all those rides? A mountain of data. The Apollo Go fleet has now driven over 300 million autonomous kilometers. And for an AI system, real-world data is absolutely everything. It's the fuel. So that number represents a huge competitive advantage. Their international expansion is also speeding up. Just look at this timeline in the UAE. In less than a year, they went from just entering the market to launching a fully driverless commercial service and getting the first-ever testing permit in Dubai. That is not just fast, that's light speed for this kind of operation. And here's the really smart part. They're not trying to do this all on their own. They're making strategic partnerships with huge global players like Lyft and Uber. These deals give them instant access to established platforms, customers, and all the regulatory know-how in new markets, which just accelerates their growth like crazy. Okay, so for a skeptical investor, this all sounds pretty promising. But look, a growth story is only great if it can handle the tough stuff. So it is absolutely crucial that we acknowledge the very real risks and headwinds that Baidu's up against. So let's not sugarcoat it. Let's address the bear case head on. What could actually derail this grand AI transformation? Because there are several pretty significant factors we have to consider. First off, their old ad business, it's getting hammered by giants like Alibaba and Tencent. Second, you've got the whole geopolitical thing, especially US restrictions on advanced computer chips, which could seriously slow down their AI ambitions. Third, these AI projects are incredibly expensive, and it's still not clear when they become massively profitable. And finally, they operate in China, which has a strict and constantly changing regulatory environment, not to mention the general economic slowdown happening there. None of these are small risks. So with all those serious risks out there, the most important question for an investor who really cares about the fundamentals comes down to financial stability. Does Baidu have the financial strength to actually fund this really expensive transition? To put it plainly, does the company have enough cash to actually pull this off, especially while its old cash cow business is in decline? Well, the answer from their balance sheet is a big, loud yes. Baidu is sitting on a massive pile of cash, over 100 billion Chinese yuan. That's a ton of dry powder, as they say, which is mostly fueled by strong and consistent free cash flow. It gives them immense flexibility to keep investing heavily in research and development and to ride out any economic storms without having to go ask the markets for more money. And this right here might be the biggest signal of all to investors. Management didn't just talk about their confidence, they backed it up with cold, hard cash. In a move that surprised a lot of people, they announced their first ever dividend and a huge new $5 billion share buyback. For a company that's in a super intensive growth phase, that is a powerful statement about how much they believe in their long-term ability to generate cash. Okay, so let's recap. We've got a declining old business, a booming new AI future, some pretty significant risks, and a rock-solid balance sheet. So how is Wall Street pricing this really complex story of decline and rebirth? Okay, so no surprise here, but opinions on Wall Street are all over the place. Analyst price targets range from a low of about $91 all the way up to a high of over $271. This incredibly wide range perfectly shows you both the deep uncertainty and the massive potential upside of Baidu's AI pivot. The bulls and the bears both have a really strong case to make. But here's where it gets interesting. Despite all those risks, some of the quantitative models are actually signaling an opportunity here. An analysis from Investing Pro, for example, suggests that at its current price, the stock actually appears to be undervalued. It's like the market might be too focused on the decline of the old business, and its valuation doesn't fully capture the explosive growth potential of its new AI ventures. And that leaves us with the big final question, the one you, as an investor, have to answer. We know the old Baidu is fading. We know the new AI-powered Baidu is growing like a weed. The multi-billion-dollar question is this: can the new business grow fast enough to not only replace the old one, but to create a much larger, more valuable company in the process? That's the great pivot. And for investors, well, that's the bet.